that market continues under pressure. Yesterday we saw it closing at an 8-year low. Today down another 1.8%. It does not appear like there's any silver lining here.
Well, I wouldn't say there's no silver lining. Yes, granted, the market declined further today. Around midday, we saw a 184 basis point decline in the index, even though there was significant activity in banking stocks, Access Bank and GTB. So the market continues its decline. Analysts and investors have ascribed this to the crisis in the Eurozone,
sure.
The fact that bond yields are much higher. So we have short-term treasury yields trading about 15 to 17%. So there's a flight to quality as investors are looking for higher yields. And then there's just a general uncertainty about the direction of the market, especially in the first quarter of the year. So there's a general apathy that's leading to a dumping of stocks in the market. Right. However, I said earlier that I don't necessarily think there's no silver lining. I think that sure. In this situation, there's an opportunity for long-term value investors to pick up good stocks.
So let's talk about where they are finding those stocks until Governor Sanusi begins to give the market some respite, which might be a while. What would you be looking at? What sectors and why?
Well, we think there are a few bright stars in the banking sector, so GTB continues to be attractive. I also think that because we are getting to the end of the resolution of the banking crisis with the M&As being concluded, we will see more activity in that space as the industry settles down, as mergers are concluded. So I think that that's an attractive sector. We're also seeing relatively fairly good performance among the food and beverage companies. So I think that that's also a sector we'll continue to focus on.
Yeah. Now this morning we had results coming out of PZ Cussons, and they had a trading update for the first half, and those earnings were below management's expectations, which is important particularly because you'd imagine they would have a greater sense of how the company is trading, never mind analyst expectations. And they are citing here higher input costs. So costs are much higher than they had anticipated, which suggests that that pressure may not be, may be around for a while longer.
Yes, I agree. I haven't had the time to study PZ's report. However, you mentioned something which is common among a lot of Nigerian businesses in the manufacturing space. Input costs are rising, and this is eating into their profitability. So I think it's a concern that companies will have going forward. A few companies, for example, those who have established independent power plants to support their businesses are managing this cost a little bit better. Yeah. However, with the removal of subsidy, with anticipated inflation and rising borrowing costs, it is anyone's guess as to how the first half of the year will play out with respect to input costs for manufacturers. Yeah,
you alluded to the fact that investors are taking the view that it's better to be in quality, and you alluded to the fact that bonds may perhaps be the place to be. But we have got this report suggesting from the Debt Management Office, suggesting that there is a risk in the refinancing of the debt that has been issued by AMCON. Let's talk about that risk. What exactly is the problem here? What would you imagine that Governor Sanusi will stand behind whatever needs to be done for AMCON?
Okay, I haven't read the DMO report, so I can't comment on specifics.
Sure.
But what I can tell you is that it is not, I do not believe that this refinancing risk is a risk that investors in AMCON bonds were unaware of. Let's keep in mind that the primary sources of repayment of the AMCON bonds are the NPL recoveries, their investment activity with respect to disposal of assets and management of the portfolio. And there's also a sinking fund to which the CBN and the banks contribute. So this serves as the primary source of repayments for the AMCON bonds. However, there's a risk that there will be a mismatch between the tenure of the AMCON bonds. We currently have about 1.7 trillion in AMCON bonds maturing in 2013. So there's a possibility of a mismatch between those maturing obligations and availability of repayment funds to repay those obligations. And I guess that's where the refinancing risk may arise. I think that if AMCON is able to sustain its recovery efforts, we are aware that as of November, they had recovered about 15% of the 3.4 trillion naira NPL portfolio. So
Right.
if AMCON is able to sustain those efforts to the extent that the sinking fund continues to grow, and to the extent that the AMCON is able to manage its portfolio of assets, I believe that it will be able to generate, realize its intended repayment sources. However, to the extent that it's not able to do that, then there is a refinancing risk because it will have to issue new bonds to repay, to redeem maturing bonds.
Dafe.
However, at this point,